If you receive Social Security benefits, this is one update you'll want to give your full attention, because March is bringing real, tangible changes to how much money is coming in, when it's arriving, and for some people, how much they may have been missing for years. In the next few minutes, I'm going to walk you through exactly what's shifting, when your payments are scheduled, and how to make sure you're not leaving behind a single dollar you've already earned. I'm Zane, and this is Senior Security Updates, the channel where we break down everything that matters for people who are on Social Security or approaching it. No government jargon, no unnecessary alarm, just straightforward information that affects your money and your life. Let's get into it. Understanding the foundation. What Social Security actually is. Before we get into the specifics, let's take a moment to establish some context, because even people who have been contributing to this system for decades don't always have a clear picture of how it all works, and that's completely understandable. Social Security is a federally administered program that provides monthly payments to retired workers, individuals with qualifying disabilities, and the families of workers who have passed away. Throughout your working life, a portion of your earnings is directed into this system through payroll taxes. When the time comes, whether due to retirement, a disability, or the loss of a spouse, those contributions come back to you in the form of regular monthly payments. For a significant portion of Americans, particularly seniors, Social Security isn't supplemental income. It's the primary financial foundation that covers rent, groceries, medications, and other essential expenses. That's exactly why any change to this program carries real weight, and March of this year is bringing changes that many recipients are going to feel directly. The 2025 Cost of Living Adjustment and what it means in March. The first change most people are noticing this month relates to their payment amounts. At the beginning of this year, the Social Security Administration applied its annual Cost of Living Adjustment, commonly referred to as the COLA. This adjustment is made every year to help Social Security payments keep pace with rising prices across the economy. Most of us have experienced firsthand how much more everyday expenses cost compared to just a few years ago. Groceries, utilities, housing, fuel. The cost of living has gone up across the board. The COLA is the government's mechanism for acknowledging that reality and adjusting benefits accordingly. For 2025, that adjustment was set at 2.5%. On its own, that might seem modest, but translated into actual dollars, it has a meaningful impact, especially for households on fixed incomes. To put it in concrete terms, if your monthly Social Security benefit was $1,800 before the adjustment, a 2.5% increase adds approximately $45 per month to your payment. Over a full year, that amounts to an additional $540. For someone carefully managing a fixed budget, that extra money can go toward a utility bill, a prescription refill, or simply some added breathing room. March is the month when many recipients are really beginning to feel this adjustment consistently in their accounts, as the updated amounts have been flowing through the system. But payment amounts are only one part of the picture. Let's talk about when your money is actually arriving. March Social Security. Payment dates. The Social Security Administration does not distribute payments to all recipients on the same date. Instead, payments are scheduled based on your date of birth, specifically, which part of the month your birthday falls in. Here's how the schedule works. If your birthday falls between the 1st and 10th of the month, your payment arrives on the 2nd Wednesday of March. If your birthday falls between the 11th and 20th, your payment comes on the 3rd Wednesday. If your birthday falls between the 21st and 31st, your payment is distributed on the 4th Wednesday. There is one separate group, individuals who began receiving Social Security benefits before May 1997. For this group, payments arrive on the 3rd of each month, regardless of birthday. For SSI recipients, payments are issued on the 1st of the month. If the 1st falls on a weekend or federal holiday, the payment is moved up to the last business day before that date. Because of how the March calendar falls this year, the specific Wednesday dates may feel a bit different from what you experienced in January or February. Some recipients will see their payments earlier in the month, while others may feel like they're waiting a little longer than usual. If you're ever uncertain about your specific payment date, Logging into your My Social Security account at ssa.gov will give you that information directly and accurately. The Social Security Fairness Act. What changed and who it affects. This is one of the most significant developments in Social Security policy in recent memory. And if you haven't heard about it yet, this section is especially important. The Social Security Fairness Act was signed into law and eliminates two long-standing provisions that had reduced or eliminated benefits for millions of Americans. Those provisions were the Windfall Elimination Provision, WEP, and the Government Pension Offset, GPO. Let's break down what each of these actually meant in practical terms. The Windfall Elimination Provision affected workers who split their careers between jobs that paid into Social Security and jobs that did not, such as certain state and local government positions, some federal roles, and some international employment. Because of this rule, their Social Security benefit was reduced, sometimes substantially. The original justification was to prevent individuals from collecting both a non-Social Security pension and a full Social Security benefit simultaneously. However, many workers and advocates argued for years that this provision unfairly penalized people who had simply worked in multiple capacities throughout their careers. The government pension offset was a related rule that specifically impacted spouses and surviving spouses. If a person received a pension from a government job that didn't contribute to Social Security, the GPO could reduce, or in some cases completely eliminate, their spousal or survivor Social Security benefit. There were widows and widowers who lost their entire survivor benefit as a result of this provision, which had profound consequences for people who had been depending on that income after losing a partner. With the Social Security Fairness Act eliminating both of these provisions, millions of affected workers and their families are now eligible for higher monthly payments. Some individuals may see modest increases, while others, particularly those who were significantly affected by the GPO, could see considerably larger adjustments. The Social Security Administration has been processing these cases and working through the necessary updates. In March, many affected recipients are either beginning to receive revised payment amounts or receiving official notices explaining what their updated benefit will be going forward. If you worked in a government job with a pension and you believe your Social Security benefit was reduced under WEP or GPO, now is the time to log into your SSA account or contact the Social Security Administration directly to find out what your updated benefit looks like. Supplemental Security Income, SSI. Key details. Let's spend a moment on Supplemental Security Income, commonly known as SSI, because it operates differently from standard Social Security retirement benefits and the distinction matters. SSI is designed to support individuals with limited income and limited financial resources, including elderly individuals, people who are blind, and people with qualifying disabilities. Importantly, SSI eligibility is not based on your work history, which sets it apart from retirement or disability benefits under regular Social Security. For 2025, the maximum federal SSI payment for an individual is approximately $967 per month, and for eligible couples, it's around $1,450 per month. These amounts also increased with the COLA adjustment, which carries real significance for recipients who rely on SSI as a primary income source. Some individuals receive both SSI and regular Social Security retirement benefits simultaneously. This is referred to as concurrent benefits. If that applies to your situation, it's important to understand both the amounts you receive from each program and the different dates on which they arrive. SSI payments come on the first of the month, while retirement benefit payments follow the Wednesday birthday-based schedule. Receiving deposits on two different dates is entirely normal for concurrent beneficiaries. Medicare, Part B premiums, and your net benefit. Here's something that trips up a lot of people, and it's important to address it clearly. For most recipients who are enrolled in Medicare, the Part B premium is automatically deducted from your Social Security payment each month before the deposit reaches your bank account. Medicare Part B covers doctor visits, outpatient services, and related medical care. In 2025, the Medicare Part B premium increased. That increase is taken directly out of your Social Security check, So while your overall benefit went up due to the COLA, a portion of that increase was offset by the higher Medicare premium. For most recipients, the net result is still a modest increase compared to what they were receiving last year. But the actual deposit may appear smaller than the COLA percentage would suggest, and that can be confusing if you're not aware of the deduction. If your payment seems lower than you expected given the COLA announcement, checking your Medicare premium deduction is almost certainly the explanation. You can verify the exact breakdown through your My Social Security account at ssa.gov. Social Security and taxes, what many people don't realize. This is a topic that genuinely surprises many people who are newer to receiving benefits, so it's worth addressing directly. Social Security benefits are not automatically tax-free. Whether your benefits are subject to federal income tax depends on your combined income, which is calculated by adding your adjusted gross income, any non-taxable interest income, and half of your Social Security benefits. For single filers, if combined income falls between $25,000 and $34,000, up to 50% of your benefits may be taxable. If combined income exceeds $34,000, up to 85% of your benefits could be subject to federal tax. For married couples filing jointly, those thresholds are $32,000 and $44,000 respectively. This isn't a new development, but it's something many people are actively navigating right now as they file their 2024 tax returns and plan for the year ahead. If you're unsure how this applies to your situation, consulting with a tax professional is a worthwhile step. Free tax preparation assistance is also available to seniors through programs such as the AARP Tax Aid Program, which may be available in your area. This is general educational information and does not constitute tax advice. Please consult a qualified tax professional for guidance specific to your circumstances. Accessing your benefits online and managing wait times. The My Social Security online account has become one of the most important tools available to recipients. Through this account, you can review your payment history, check upcoming payment dates, update your direct deposit information, access your benefit verification letter, review your Social Security earnings statement, track any changes related to the Social Security Fairness Act. If you haven't yet set up your account, visiting ssa.gov and creating one takes only a few minutes. Having access to this account means you're never left without accurate, up-to-date information about your benefits. It's also worth acknowledging that many recipients have experienced longer than usual wait times when trying to contact the Social Security Administration by phone or visit a local office in person. If you need to reach the SSA, the most efficient approach in most cases is to handle matters through the online portal where possible. If a phone call is necessary, calling early in the morning tends to result in shorter hold times. And if an in-person visit is required, calling ahead to schedule an appointment is much more reliable than walking in without one. Protecting yourself from scams. Every time there is significant news about Social Security, a new law, a benefit increase, a program change, scammers take notice and look for ways to exploit people's attention and excitement. This is something we take seriously here at Senior Security Updates, and we want to make sure you're prepared. Here's what you need to know unequivocally. The Social Security Administration will never call you unexpectedly and ask for your personal information or Social Security number, threaten you with arrest, legal action, or benefit suspension if you don't act immediately. Ask you to pay a fee or verify information using gift cards, wire transfers, or cryptocurrency. If you receive any phone call, text message, or email making these kinds of demands, hang up or do not respond. Do not click any links. Do not provide any personal information. You can report suspicious contacts to the SSA's Office of the Inspector General by calling 1-800-269-00271 or visiting oig.ssa.gov. Safeguarding your personal information is just as critical as understanding your benefits. Working while collecting Social Security. This is an area where many recipients get caught off guard, so it's worth explaining clearly. If you are below your full retirement age and are still earning income from work while collecting Social Security, there is an annual earnings threshold that applies. For 2025, that threshold is $22,320. If your work earnings exceed that amount, your benefits may be temporarily reduced. Specifically, $1 in benefits may be withheld for every $2 you earn above the limit. The word temporarily is important here. The withheld amount is not permanently lost. Once you reach your full retirement age, the Social Security Administration recalculates your benefit and provides credit for the months during which payments were reduced, resulting in a modestly higher monthly payment going forward. In March, some recipients are beginning to notice these adjustments as the SSA processes earnings information for 2025. If your payment seems unexpectedly lower and you're working while collecting, this earnings calculation may be the reason. For anyone who has already reached full retirement age, this rule no longer applies. Once you hit that milestone, you can earn any amount from employment without any reduction to your Social Security benefit. The timing decision. When to start claiming. For those who haven't yet begun collecting benefits, the question of when to start is one of the most consequential financial decisions you'll face in retirement. Getting it right can influence your total lifetime income by a substantial amount. The earliest age at which you can begin receiving retirement benefits is 62. However, claiming at 62 means accepting a permanently reduced monthly payment, potentially as much as 30% less than what you would receive by waiting until your full retirement age, which for most people currently approaching retirement is 67. On the other end of the spectrum, if you delay past your full retirement age, your benefit grows by approximately 8% per year through what are called delayed retirement credits up until age 70. For someone whose benefit at 67 would be $2,000 per month, waiting until 70 could bring that figure closer to $2,480 monthly. And over a long retirement, that difference compounds into a substantial sum. The right choice depends on your health, financial needs, employment situation, and other personal factors. There is no single answer that fits everyone. What matters is making an informed, considered decision, ideally with input from a financial advisor or by using the retirement planning calculators available directly through the SSA's website. This is educational information only and does not constitute financial advice. Please consult a qualified professional for guidance specific to your personal situation. Bringing it all together. Let's recap the key points from today so you can walk away with a clear picture. The 2.5% COLA that took effect at the start of 2025 means higher monthly payments, and March is the month when many recipients are truly feeling that adjustment reflected consistently in their accounts. The Social Security Fairness Act has eliminated the windfall elimination provision and the government pension offset, delivering long overdue benefit increases to millions of public sector workers, teachers, firefighters, police officers, and other government employees, as well as their surviving spouses. Many of those recipients are seeing updated payment amounts or receiving official notices right now. Payment dates continue to follow the standard birthday-based Wednesday schedule, with SSI payments arriving on the first of the month. The specific calendar layout of March may make the timing feel slightly different from prior months. Medicare Part B premiums are still being deducted before payments are deposited, which means the net increase in your check may appear smaller than the COLA headline figure suggests. The My Social Security online account at ssa.gov remains one of the most valuable tools available to you for staying on top of all of it. A final word from Zane at Senior Security Updates. Here's the message I most want you to carry from today's video. Don't leave money on the table and don't get caught off guard. Know what your benefit amount should be. Know when your payment is scheduled to arrive. Know how to verify it and know how to protect yourself from anyone who might try to take it from you. These are benefits you contributed to throughout your working life. You earned them. And staying informed is the most powerful tool you have for making sure you receive every dollar you're entitled to. If anything about your payment ever looks off, if the amount seems wrong, if a deposit doesn't arrive as expected, or if you receive communication that doesn't feel right, don't wait. Contact the Social Security Administration directly through ssa.gov or by calling their official number. And if this video helped you understand something more clearly, please share it with someone in your life who is on Social Security or approaching retirement. This is the kind of information that makes a real difference, And that's exactly what Senior Security Updates is here to provide. This video is intended for informational and educational purposes only. It does not constitute financial, tax, or legal advice. Please consult a qualified professional for guidance specific to your personal situation and always verify information through official government sources. Thanks for watching. Stay informed, stay protected, and we'll see you in the next one, right here on Senior Security Updates.